Hey everyone, welcome to our 30 days GST challenge. Today is our day first where we'll discuss the basics of GST. GST, as name suggests, goods and services tax. It means we have to charge and levy tax on goods as well as on services. It is the biggest tax reform since the independence. Before 1st July 2017, there were many taxes which were levied on goods as well as on services. There were cascading effect, that is tax on tax. So after the introduction of GST, which came on 1st July 2017, it consumed all these different types of taxes, goods and services tax, which was implemented on 1st of July 2017. In the beginning, J&K, Jammu and Kashmir, was not the part of GST. It became part of GST on 8th of July 2017. And on 31st of October 2019, J&K was split under two union territories. One is J&K, second is Ladakh. Taxable event. Under the GST regime, supply is the main targeted point from where we have to start the levy and charging the GST. If a particular transaction is covered under the meaning or definition of supply, we can say that we will charge or we will levy GST on such goods or services or both. Self-supply is also be taxable under the GST regime. It will also be considered as a supply, as we can see in case of stock transfer. If we have a head office in Delhi and we have to transfer some stock to Maharashtra to our branch office, we can say that it is a self-supply to the same person from one state to another. This type of supply is also considered and taxable under the GST regime. Some transactions without consideration are still taxable under the GST regime, like gift to employees. There are certain thresholds which we have to see. No centralized registration. There is no provision under the GST regime such as centralized registration. One has to take a different GST registration under the different states. Types of taxes under GST. Since we are working under the dual GST model, first is CGST, which is Central Goods and Services Tax. That means the central government will collect and levy the taxes. Second is CGST and UTGST. CGST stands for State Goods and Services Tax and Union Territory Goods and Services Tax. That means that particular state or that particular union territory is allowed to collect and levy the charges. Third is IGST, that is Integrated Goods and Services Tax. That means the center is going to collect the tax component. Since GST is a destination based tax, that means on every value addition, we have to charge and pay the tax. For example, if a manufacturer is from Uttar Pradesh and finally the consumer consumes the goods in Maharashtra, so what will be the scenario in the supply chain? We'll see. This manufacturer manufactures some goods worth rupees 100 and he sold to wholesaler for rupees 100, on which GST was 18%. He paid GST in cash. Value addition at the end of manufacture was 100 rupees. Then wholesaler sold that particular goods for 150. He added 50 rupees as a value addition to the goods and he sold